What's up guys, this is Chris, welcome back to my video. And on top of the craziness with FinV, which I just did a video on today as well, doubleheader here, I'm also going to tell you guys about a stock that I just bought today. And it's a very exciting one. I just started buying some shares here and I'm looking to buy more shares in the future if we hit certain price points that I'll discuss. But this company is a very exciting IPO and it is Coupang, otherwise known as CPNG, or otherwise known as the Amazon of South Korea. So we're going to discuss exactly what makes it have such a big title, does it live up to the hype, and we're going to discuss everything from the future growth projections and all the positives towards this stock and why I'm buying some shares here today. So Coupang is a e-commerce company that operates from South Korea. It's been around for almost 10 years now. And it's transformed itself from initially a company that had a similar model to Groupon and a similar name, right? And that has gone to new heights and a totally different business model that's more like Amazon with a third-party marketplace as well as its own original line of products. They also have a comparable product to Amazon Prime that they launched 2 years ago. And they have Instacart type of business, and they have DoorDash as well. So you're getting a couple of different businesses all in one, not to mention a fintech company that they span off. I'm not entirely sure what's the percentage of ownership there, but that is another growth vector for them and a business that segues and builds upon their own e-commerce platform. And digital payments is obviously a sector that is growing throughout the entire world, as well as the previously mentioned ones. So they're in a lot of great secular tailwinds, a lot of areas of the economy that are growing and have benefited from the pandemic and will continue to benefit and thrive in the coming years as digitalization really accelerates.
The consistent vein through all of those iterations, through that evolution, has been a spirit that we all often refer to in our motto. Let's create a world in which customers ask, how did I ever live without Coupang?
And a really interesting thing about Coupang is that one of the key differentiators is that it offers a service that allows them to have customers place orders before midnight, and by 7 a.m. that customer is going to wake up to that package at their door.
The only models that we had seen were primarily like that of Amazon, which had built out an impressive fulfillment infrastructure, but had relied in large part to very advanced infrastructure that had been built out by the US Postal Service. And at the time, we really envied that. So we built, again, not only a fulfillment infrastructure, but the largest directly controlled fleet of trucks and drivers to deliver those products in multiple ways throughout the day. So what seemed like a curse at that time, that we had to build this entire infrastructure and build the technology to integrate it all end to end by ourselves from scratch, ended up becoming a huge blessing.
And as a result, over the past several years, because they built upon this network and they built out this infrastructure, they're really reaping the benefits, okay? So when we look at some of these numbers right now with the revenue from their SEC filing, you're gonna see some really impressive stuff. And it's not just the revenue, of course, but a lot of other metrics. All right, guys, so I am looking at the SEC filing for Coupang for you right here, so we can go over it together and look at some key facts and bullish points. In Korea, the percentage of e-commerce sales relative to total retail sales in the country is still relatively very small, okay? You can see that Korea is quite an affluent country nowadays, right? 4th largest economy in Asia, 12th largest globally as of 2019. That has since gone up through 2020 and into 2021. All right, total spend in retail, grocery, consumer, food service, and travel in Korea was $470 billion in 2019, and that is expected to increase to $534 billion. So that is still experiencing healthy growth, but the total e-commerce spend was only $128 billion in 2019, or that's about one third or even that's 1/4 approximately of total spend. And that is expected to grow to 206 billion by 2024. Okay. So that is going to grow at about 10% rate through all those years. And importantly, right, because e-commerce spend is going to grow and because Coupang, as we'll see, has a very large market share, they are going to capitalize on that especially. All right, so looking at the data here, you can see that e-commerce market share for Coupang is around 25% right now. 25% of all e-commerce sales go through this company. Okay, the closest people to that are in the tens. Okay, and some companies are obviously losing market share to Coupang. Okay, over the past year, actually, most companies did not make any progress, but Coupang actually made quite a lot of progress in market share. Okay, so they're taking a big bulk of customers, right? So that is very exciting. Okay, on top of last note about Korea. Okay, they have an extremely high smartphone penetration. Okay, and also internet penetration. They have some of the best internet speeds in the entire world, even actually. So the infrastructure was already there for them to capitalize on, and they can pretty much reduce. They have like no friction in marketing and getting customers on board and customers having a good experience because everyone already got smartphones. So buying stuff online is going to be super easy for them. Okay, so now let's take a look at some of the hard numbers, okay, the financials, and you can see they really did a lot of growth at scale here as this picture shows. So looking at the numbers in Q1 2018, they did $900 billion in revenue, US dollars. Going fast forward just a few years, just two or 3 years here, they have 4x'd their quarterly revenue. And now they're doing well over $12 billion in revenue this past year, okay? And this coming year, I'm sure they're going to do at least 50, probably 70%, I would say, over the next year. All right, so looking at the income statements here, you can see that the total net revenues, as we mentioned, have gone up dramatically from 4 billion in 2018 to 6 in 2019 and to 12 in 2020. That net loss has been going down steadily from 1 billion in 2018 to 700 billion in 2019 and $474 million in 2020. Okay, so that's always a sign you want to see with a company that is continuing to grow. Their net loss is ideally going lower, or their revenues are going up faster than their cost of goods, all right, or the cost of sales. Their total assets is much higher now than their total liabilities. So thinking about this company, this is very exciting. It's very similar to SE in certain ways, right? Because you do have a company in Asia in a growing market, and e-commerce there is very much less developed than in the United States. So there is still a lot of growth ahead of it. And it's really another 5 to 10 year growth story.
I think we've been fortunate to be working with all my colleagues and investors who've been aligned and unwavering on the long-term strategy. We're here because we've kept our eyes on that long-term strategy to build real value for our customers and our shareholders. So I think we will continue to remain focused. This IPO now gives us resources to remain steadfast on that journey. So we're really excited.
And a couple of things I forgot to mention, some key data here that really drives home the point about customer acquisition and the long-term potential for that. This shows you here, these charts, the cohort information. So when a customer goes on the platform for the first time, how does their spending change over the next couple of years after that? And you can see the 2016 cohort spent 3.59 times the original amount they spent in year 1 by year 5. And that is only getting faster and faster. So, look at the 2019 cohort. A year later, in year 2, they already doubled their spending. And all these cohorts are tripling, and a couple years from now, they're quadrupling the amount they spend on these platforms. So the cost to advertise and acquire customers in the beginning, sure, that's going to be expensive. That's going to look bad on the balance sheet and on the income statement. But there is a real reason why they're doing that. And thus, you could really see the customer loyalty and the fact that the total spend by existing customers represents 90% of their revenue. And this other chart here shows you again that customer loyalty is a lot stronger actually than a lot of the other e-commerce platforms in the United States especially. Lastly, I thought it was pretty interesting data. If you go on Google Trends, you will see that this company, in terms of searches, in terms of, regular people interest in this platform has grown massively. Okay, so this is kind of like a scale from 1 to 100, where 100 represents the highest search interest of all time. And you can see over the past year in 2020, that interest has shot up. So of course, more people are being exposed to the platform. They're getting those new customers who will become existing customers that spend a lot of money. And as we've seen with the data about South Korea, these people are going to have more and more money to spend. So with this IPO, they've raised around $4 billion that they can use to really, again, accelerate some more growth to this company. Maybe look out for some other business opportunities, like how Amazon in the past, they transitioned to cloud as well and getting a lot more profits from there. Okay, and that will definitely help improve the company's financials and actually move towards profitability in the future. Now, when it comes to valuation, the reason why I still bought some shares here, although it IPO'd much higher than expected or initially priced, but what IPO doesn't anymore these days, they're up like 50, 100% on the first day, I still decided to buy some shares here. When you look at some of the valuation metrics out of Amazon and JD, I believe you're going to see a lot of proof and reason for this. So Amazon for a long time, if you look at these charts, trades at a price to sales of around 3 to 5. Okay? And that basically means that the total value of the company is 3 to 5 times the amount of sales it generates on an annual basis. Okay, that's a very reasonable number in my opinion, especially, Amazon. For a long time, by the way, Amazon was not very profitable, very similar to Coupang, but they focus on the long-term trajectory and acquiring all those customers and building out a network, such a staple to the daily lives of all these people. Keep in mind, Amazon's sales growth has historically been for a long time around 30%, 50% in many years. And so with Coupang, because it's in an earlier stage and because it's presenting better growth actually than Amazon at this stage, if you look at the comparisons here, I have Amazon at 10 billion revenue and Coupang just did 12 billion in revenue, excuse me, then I think it's pretty fair valuation at this price actually. And if you look at JD.com, this stock is somewhat similar. They have lower margins than Amazon, so their business is not exactly that profitable. It's just that they do an insanely large amount of volume, much higher than Coupang right now, but they have a much lower sales growth. And that trades at around a 1.5 price to sales. It's pretty low, honestly. I think JD could be higher. So over time, I think Coupang it really depends on how profitable their various business segments will be and how long they can sustain that sales growth. But I think in the long run, it will probably end up somewhere around that 3 price to sales. And depending on that PE ratio over time, that profitability, I think it could get to similar levels to what we're seeing right now with a JD or with an Amazon, where it will have a 30, 40, 50 PE ratio. So with that being said, guys, I am going to hold these shares that I just bought at $52 per share, 52.50 cents, and I would expect to buy a maximum of around 100 to 200 shares, being that I already own SE and that is my main e-commerce stock. But it's always good to diversify, and we'll see if better opportunities present. Maybe if it drops to 45 or 40, and that PS ratio comes down and that valuation comes down, then it'll start to get more attractive. I would have loved to buy shares at 30 or 35, but obviously nowadays you really can't buy IPOs that low. If it ever dropped that low, I would definitely bite your hand off at that opportunity. So with that being said, let me know in the comments down below if you are invested in Coupang or you're interested in buying some shares. We're going to name it the Coupang Click. So if you are already in it, let me know in the comments down below. Until next time, my friends, stay well and invest responsibly.